What's up guys, welcome back to my weekly trading reflection. I'm super excited to get back to this after my 2-3 week break because I was finishing that project I explained in my last video. But now I'm finally back and I'm super excited to learn again from my mistakes and to reflect, and hopefully you guys learn something from this too. To be honest, it was a very bad week to come back. Actually nothing to laugh about. It's just really disappointing performance of myself this week, especially after all these good and green weeks and months previously. I had my very first bad week because I was just not in the flow state I was supposed to be. I was not showing up, I was not following my rules, etc, right? I'm falling back into my old bad habits, and yeah, that's not what we should do, right? So basically, I am funded on my 50k top step. I'm funded on 200k on Blue Sky, but this week, because I was just not really in this flow state I want to be, I basically decided to buy two 50k top step X accounts. They had like a promo where you only paid like $19, and yeah, I just didn't value it. I just literally decided to just increase my risk to just see if I can pass it in a week or two, but that should never be your mindset. Really bad. Yeah, let's just go over all my trades I took this week and learn from them, because if you don't do this, then yes, it's a bad week. And if you do this, then the bad week turns into a good week. So yes, let's look at the price action of this week. So just so you guys know, Monday was a bank holiday, didn't trade. Tuesday I did trade, Wednesday I traded, Thursday was the best day to trade, and then Friday was a little bit of a meh day. But yeah, let's go first over my bias going into the week. I had a bearish bias just because, first of all, I want to say all credits to Day and Justin Werlein. Those are my biggest mentors, especially Giovanni Day, Trader Day. It's basically where I learned the most from in the last 4-6 months in December last year. So yes, going into the week, I had a bearish bias because we had this hidden bearish monthly cycle SMT. So what does this mean? Well, we had last week's high right here on NQ, right here on ES, and right here on the Dow, somewhere here. And we don't look at the highs, right? Highs are important for SMT, but if we don't see SMT at the highs with like the wicks, I look at the bodies, right? The body closes. And what you see right here is last week's highest close of NQ is right here. And there was a candle closing above that highest close of last week in the current week. So that is a monthly cycle SMT, a bearish SMT between the weeks, right? And it's a hidden one because you don't really see it, but it's there with the closes, right? So that is what initiated my bearish bias. I was bearish going into the week because of this. And let's look at the lower time frame where I took my trade. So we had this big like SMT right here, okay? This was where we basically took out that highest close of last week, and then we were on Monday right here trading here, almost market open, which is right here. But if you look at this, of course it's always hindsight, but it's better to learn from this and see what price actually did, to learn from my mistakes and improve. So going into market open on Monday, oh no, sorry, it was on Tuesday, of course. Monday was a bank holiday, I didn't trade, but we basically had a lot of buy side build up right here, which was interesting because at market open, we took that out basically right here. Interesting enough, we had a fair value gap also right here. It was in discount, whatever, right? So we had that initial bearish bias, and it's basically confirmed, okay, we are actually ready to short, right? Now, let's put on all of that makeup on the chart. A lot of stuff, don't get distracted. It's just for me so I can explain everything. But basically, this here was a 90-minute SMT because on ES at this time, this formed a higher high, right? But on NQ, it was a lower high. So this is what I learned the last weeks from Day also, is that the best liquidity pools for manipulation are above SMT highs or below SMT lows. So first of all, of course, this is already an interesting zone because we have the gap, we have it being inside discount, we have now this also playing a role because this was an SMT and we took that SMT out right at market open, right? We took all of these buy side right here and then we displaced. So this was the best trade you could have taken, in my opinion, according to my systems, is a short right here once we took out all of this liquidity and then displaced lower, right? So as you can see, I marked this down right here. This is a trade I didn't take, but yeah, basically that's what was supposed to be the best trade. Also because looking at ES and comparing it to NQ, let's see, Monday is right here. Let's take a look at ES. You also see that once we took out this high, these highs, you see, right, this is SMT, right? This is really clear to see. We took it out because SMT highs are a nice liquidity pool for manipulation. And you see right here, this high is the swing point is a bearish candle, right? But on ES, it is a bullish candle. So this is also really interesting. This is called the precision swing point, and basically is also a form of cracks in correlation next to SMT. It's also a really nice sign that a reversal can occur, right? This is a different candle than on ES. We have this sweep of buy side. So yeah, it's really interesting to look for shorts. Now let's take a look at what terrible trades I took. Basically the draw on liquidity, if you entered right here, was amazing. Look at all these lows right here. Nice take profit targets. But the problem is, after I saw this, I had this bias, which was good, right? I analyzed the market good, but I was just chasing this because I was just looking for more shorts once we retrace back to this gap to then target even lower. But it's actually not a good trade because we already took out all of this liquidity with this move, right? We took out this low, we took out this low, this low, this low, this low, all of these lows, right? So it turns lower probability once we want to short here. I want to be at the market, I want to be in a trade right at the manipulation, just like after the little displacement. Let's look at the 1 minute, right? This has should be the trade, right? Take out the high, displacement, this should be your entry, or here, like at least here, latest here, right? And then you take out at 2R, that's your trade, right? Easy 2R, that was a 2R. But the problem is, I was just chasing this. Look at all of these trades I just entered, just terrible. I was just looking for more shorts, more shorts, more shorts, more shorts. But because we already took out so much drawn liquidity, we know that the market moves from liquidity to liquidity. And what do we do here? Let's take this off. This whole range right here, we already retraced to equilibrium of this whole range, to OTE. Already took out a lot of liquidity. So why would we chase for more shorts just for this final target to take out if we don't have a clear other cracking correlation, if we don't have a clear other SMT at the highs? So I was just looking for a sweep, and then I was just shorting this, right? Which is not a good reason to short this. I was just too late. That's my main issue for Tuesday. So this was a trade I should have taken. What was this? It was a 90-minute SMT. Above SMT highs is where a lot of liquidity is. So then we took out this liquidity and we took out all of these highs. So this was a trade you should have taken. Above the true opens also. This was the true session open, the true day open. Really nice trade. But then, yeah, as I write down right here, you see, I don't want to short so far from the true opens. I don't want to chase. Only longs are valid from here, right? Because we are back at the equilibrium of the range. We took out a lot of liquidity, a lot of sell side liquidity. So now maybe buy side is next, right? Because we know that market moves from liquidity to liquidity, all that stuff. So after we have this little SMT at the bottom, I should not be looking for shorts anymore if we don't have a bearish SMT that can oppose this. So what happens here is, let me take a look. We go up, we displace up. I was still bearish right here. I was looking for shorts. I saw the sweep. I want to enter right here. Bad trade because like this is not a cracking correlation. There's no SMT whatsoever. Bad trade, just a sweep inside the fair value gap. After this, it's just not good because we already had the move, right? This is just low probability, not good. I missed this colliding SMT, which is basically SMT between two cycles at the same time. This is 10 this is the Q3, this is Q4, but also Q4 and Q1 of microcycles, right? So this is basically like a microcycle SMT, and this is also at the same time a 90-minute SMT, right? Between 2 quarters of the session and 2 quarters of the micro session. So after this should have been a nice long entry, but I just decided to short because I didn't see this. If I took this short, I should have taken at least everything here, right? That's not what I did. I was just greedy. Yeah. Also, this SMT right here we had at the bottom, it was cause there was like news right here. If you click on this news indicator, there was news right here which which tanked us down and then formed the SMT. And SMT which is formed around news, before news, at news, just after news is usually high probable, right? So that's why we should trust this SMT more to drive price up. And that's basically what happened. I missed this SMT. I was just focusing on shorts, but I was missing the bullish SMTs right here. And shorting here is just bad because there is no bearish SMT present, only bullish ones, right? Which brought price up. All of these small SMTs, they don't have any relevance because order flow has simply shifted, right? We want to take out this high next, and look at all these trades. It's just bad. But I'm showing this because it's the reality of trading, right? This is the reality of trading. So another important factor is watch after we took out this high. What happens? We just chop, right? When did this high get taken out? Right here, okay? As soon as this high got taken out right here, what do you see? Just chop, just accumulation, right? You really can't trade this right here. Only after the PM session starts, we had this daily SMT forming. So between the sessions, this is between New York and the PM session, so AM and PM. And then we had another one, which confirms this one between Q1 and Q2, right? So this was the only other trade you could have taken. If you see like a displacement right here, you can enter somewhere here, put your stop at the SMT high, and then just target the lows, right? So this was my reflection of Tuesday. I'm gonna show you guys the best trades because this is a mess. I guess you guys can't figure this out, what I always mark it on my chart, but I'm gonna give you guys like the best setups at the end with like clean charts as well. So just so you know. That was Tuesday. On Wednesday we had no news, but maybe a nice setup, right? So we still had that, let me delete this. We still had this bearish SMT. It was still really, really bearish on the week. Where was it? On Tuesday, Wednesday. But I was still looking for longs for some reason. I was just having bad habits and not following my rules. I was not following my initial bias of the day, which of course is not good, right? So I was actually looking for this Fairvalue gap to hold, even though we had all of these bearish SMTs at the top, and we actually are low time frame in a bearish order flow, right? So if we toggle Wednesday on, was actually a lot of good trades that I should have taken, but I took some stupid trades. I was basically trusting this monthly cycle SMT, so between the weeks, even though it had no real displacement on the 4-hour time frame, right? If you look back at this, what is holding more importance? Is it this monthly SMT or this monthly SMT? It's the one at the top, right? I want to differentiate between micro and monthly. So monthly I will mark with a capital letter. This one holds more importance because it already had displacement, already shifted order flow. This is just a temporary SMT, which doesn't hold relevance because the order flow hasn't really shifted. This is just a retrace back, like I drew out right here, to equilibrium to then go back down, right? So I should not trust this one. And basically what we saw on the charts on Wednesday is price. What the hell just happened? What we saw on Wednesday is price just going back to equilibrium of this whole high time frame range, and then just chopping here and then eventually just going down following the higher time frame order flow. And there was, for me, to be honest, not really a trade. I was chasing this because I was bearish on the week. I was chasing this short after this high got taken out, but there was no clear order flow shift. I always want to see SMT followed by displacement, and here we had the SMT, but we don't have displacement, right? We still respect this fair value gap, which should mean to me that, yeah, we're going higher before going down. So I should always wait for a clear, like if let's say the candle closed below this fair value gap, then yeah, these shorts look better. But we had again a micro SMT, and which drove price up, right? But I neglected this. I was just so focused on this 90-minute SMT, this micro SMT, but there was no clear displacement. So a really, really bad trade. And there was nothing else that could confirm this bearish setup, right? Here again, I was just mad that I took this short. I got stopped out and I was just chasing longs. And yeah, it was just end up break even or stop loss. I don't remember. But yeah, the most important lessons is here that I can't long in premium with only a weekly SMT, which didn't really hold relevance, and a micro SMT right here. It's just not enough. It's not a great setup. There's no clear drawn liquidity. It's not within the high time from order flow. It's not it's not like around the true opens, because that's here. If you want to take a long, it's below here. If you want to take a short, it's here, but you can't take longs here because we are above the true session open, okay, right? So sorry if I'm just ranting, but this is just what's going on inside my head. It's just my thought process of reflecting and searching for trades, right? So yeah. Also, this was with the Dow, this SMT. So that's why it's also not a good SMT, because usually the best SMTs are with ES and Q if the Dow is just doing something completely else, right? If the Dow is in sync with those, then you can use it, in my opinion. Also what day confirms, so that's why I use that. So really bad trade, no really story behind it. But then the only other trade we could have taken, in my opinion, is after we had this 90-minute bearish SMT right here in the power hour. So the power hour is from 3 to 4 p.m. New York time. Basically what happened here is, if you take a look on ES and Q, you compare them, 5 minute, I think. Let me take a look. You see that again here we have a precision swing point. Right here. Okay, so ES took out this high right here. You see? Took out this high. Bam. Here it didn't. 90-minute SMT. So 90 minutes is between 2 quarters of a session. In this case, the PM session, PM New York session. And you see here the high, the swing point is a bearish candle on NQ. On ES, it is a bullish candle. So again, this bearish narrative we had in mind, like this big monthly SMT, the high time frame order flow, which is really, really bearish. We retrace back again to equilibrium of this whole range. We fill some gaps. We are above the true opens, which is optimal for shorts. Not really above a true day open, but above a true session open is always good. And it's PM, so we should actually use the PM true open, which is here. So still above, right? Beautiful. This is the true session open. We go above it from SMT. We have the precision swing point. We respect that precision swing point, right? This whole candle, this bearish candle, which is a bullish one here. We respect it. We go down. So after this displacement, you know the target is here. This is drawn liquidity. So you can take a trade here in this fair value gap. This is maybe a really close stop loss. So that's why I don't think it's a really good trade. This is not a great day to trade, in my opinion. It was just a little bit of a chop. But yeah, if you have lower targets, then yeah, this could have been a good trade. But I want to trade as quickly as possible. I want to get in and out. So this is where I want to take most out. But this is a bad RR, so I would not have taken that. So yeah, that was Wednesday. Then we had the best day of them all. That was Thursday, because on Thursday we had unemployment claims, right? It's always the best day to trade. It's Q4 of the week. usually the most explosive day of the week with all of these news events, if there are news events at that day. So let's take a look at what we had on Thursday. So on Thursday, again, I'm just keep using that monthly bearish SMT, hidden bearish SMT at the top, which is basically what I should use as a higher time frame SMT. I should neglect this because I know this is just temporary to drive price up and then follow the higher time frame order flow, because we don't really have big displacement here, right? Again, I'm saying this again. This monthly SMT already proved itself. That's why it holds more importance. If this had also like a daily or weekly SMT, then yes, I would trust longs more. But this already proved that we switched bearish order flow. So I neglect this and I only use it to see, okay, now maybe price will retrace back to a gap and then go down. This is exactly what happened, right? Of course, it's always in hindsight, but like this is how you at least learn. You backtest price, you see what you could have done, and you see the best setups and you see why you lost, and you use that for next week, right? So again, literally the same thing. We use it bearish SMT. We are bearish in a hard time frame. We have this range. We go back to equilibrium, to OTE of this range on the 1 hour time frame. We fill this nice gap. Really nice fill of this gap. You think, okay, let's go to lower time frame. This is a market maker model, right? Buy side of the curve, side of the curve. Completely delivered beautifully. But I was not in the correct state of mind. I was just not like there at the moment. I was not there with my mind. So I just took stupid decisions. I had some things going on. I need to fix some other projects, and I was just not focusing on trading. That's my biggest lesson of this week. I should be 1 hour before on the charts analyzing. I should be really, really focused. I should be reflecting more, which I was doing the previous weeks before those projects. So yes, more emphasis on that. But let's see what basically price action did in terms of my way of analyzing the market. So, okay, we delivered from this 1 hour fair value gap, but when did we do that? So going to the 8:30 news event, it was right here. So we basically had two news events, right? 8:30 right here, pushed price up, and then 10, the other news events, it just drove price lower, right? So this is actually beautiful. Why? Because before price should move down with the trend, it should fill some gaps, right? If one pair already fills a gap, it's okay. You don't want to see this one because other pair already did it. But they both filled, I think, on ES and in Q. Yeah, they both filled the fair value gap. When did it do that? It did it right at 8:30 unemployment claims. Right before it, this is just crazy. Like, how can this be random? Look at this and just ignore all of this for a moment. Just focus on this. We had daily SMT. We had a 90-minute SMT. So daily is between the sessions of the day. 90 minutes is between the quarters of a session. We still didn't fill this gap. It was so obvious that we need to fill this gap before going down, right? There should be a manipulation right here, somewhere here. Also because we had some nice buy side right here that can be taken out. But right before 8:30 unemployment claims, we had this 90-minute SMT right here and this micro SMT right here. So this is what caused price to pump, fill this 1 hour fair value gap, and then everyone basically was looking for longs, including me, because I was not seeing the higher time frame narrative behind this. I didn't see this nice sell side, which can be targeted later on. I didn't see that we actually fill a fair value gap. We have a micro SMT, but I was not really holding much importance of that, but I should, because this is clearly bearish order flow. Once we just pump up and then we just retrace so deeply, we know that, okay, order flow has switched. This was the manipulation. We had the 90-minute SMT forming right here. We had another minute 5 PSP right here. So this was a up close candle on NQ, a down close candle on ES. We had the 90-minute SMT, micro SMT right here, another SMT confirming right here. We retrace back to equilibrium of this range. So after then this bearish displacement, this is when I would take a short in the best scenario. I didn't take this, right? I was focusing on this stupid long. just because I saw this SMT, but I didn't saw that the order flow shifted. I didn't see that we filled this gap. I didn't see that actually the draw on here on the buy side was way cleaner. I didn't see that. I didn't realize that I should actually follow the high time for order flow. All of that, right? Just not in the correct state of mind. But we reflect. I see this was the best trade. Target the lows. Target the original consolidation. Beautiful 6R trade. If I really focused. So yeah, basically to recap, 8:30 news. Just before that, we had this confirming SMT, 90-minute and micro, which pushed price up. Like this is not relevant, right? Because it's the SMT that forms right before or after, like I said, is news is super important. Also below the true session open, right? Then we go up. But like you want to short, sorry if I'm just ranting, but this is so much gem. You want to short below true opens, right? So we had this SMT, 90-minute SMT and micro SMT. I always need like 2 cracks in correlation. We have 2 SMTs, so that's when I look for a trade. We go below the true session open. That's good for long. So long here. Of course, everyone will think you're gambling news, but if you're really, really trying to figure out the market, you are not gambling news. You're preparing, you're seeing your model, and you execute. This here doesn't really hold much importance because we had this 90-minute and micro SMT right here, and we didn't really displace anything, right? I will always want to see a displacement, and this was right before news. We had the bullish ones, so the bullish ones filled this fair value gap, then fair value gap was filled, micro SMT indicating that we go lower. I should be out of all longs. If you're long here, you should be out of the first bearish SMT. And then we displaced down, bearish order flow started. We just disrespect this fair value gap, indicating bearish order flow. We retrace back to equilibrium, 90-minute SMT, another SMT, a precision swing point, displacement, short, right? Target the lows. Really clean Thursday. Looking back at it, learning so much from this. If you just analyze what exactly happened. So yeah, that was Thursday. And then on Friday, nothing really much to see, to be honest. I think, again, the same thing. Retrace back to equilibrium of the range. We had still the monthly SMT at the top. Now we had a weekly SMT, bearish SMT. So even more bearish now. Retrace back to equilibrium. Fill this, I think, hour 1 gap. But not really bearish SMTs at the top. So that's why I didn't really like this. We had I don't know what this was. I don't trade order blocks. Maybe this was another precision swing point. Yeah, precision swing point. Exactly. So we delivered from this on ES, not on NQ. Yeah, don't really look at this. I don't really like this price action on Friday. It was like, when was Friday? It was the 31st, last day of the month. Not really recommended to trade. You should have made most of your money already, right? Again, here, just a little mark that whenever we have this big of a displacement down, don't chase this. Don't look for more shorts, especially if we have bullish SMTs forming now at the lows, and we are just respecting discount and we are respecting bullish fair value gaps. Look for longs and look for buy side to target now if the majority of sell side is already taken out, right? Don't chase. Always just follow the lower time frame order flow and pair it with the higher time frame order flow. So that's that. Going to my how do I call it? I forgot my playbooks. I added 2 of this week, only 2 really good trade setups that I could have taken. It was the one on, let me see, on Tuesday, which is this one. Remember, I said we had this 90-minute SMT, and SMT always means that there is a nice liquidity pool there that we can use as a liquidity pool for the manipulation, right? And then I use low resistance liquidity mostly for targets, right? So SMT highs, SMT lows as liquidity pool for manipulations, and low resistance liquidity to target, right? This is also low resistance liquidity. Yes, you might say, but this is caused by SMT, right? There is no SMT right here that you can target. This is just low resistance liquidity. So we had the liquidity here because of the SMT. We took out that liquidity while forming another SMT. Displacement down, really nice trade, really nice sell side to target right here. Yeah, that was basically the trade on Tuesday. That was a textbook one, playbook, above the true opens. We had this monthly SMT at the top also. And then the best trade I just showed you guys on Thursday. It was basically just that news pushed price into the gap, and then we had a lot of bearish SMTs. We switched order flow, displacement, enter, a lot of bearish cracks in correlation. We retraced back to equilibrium also. We filled the gap. We have a precision swing point, SMTs, all of that. Really nice liquidity to target as well, right? This is all low resistance liquidity. And yeah, that's just a really nice trade in my opinion. So next week I'll probably finally trade on my funded. I'm a little bit scared to trade my first funded futures accounts, but I should just not be a pussy and just trade it. If I fail it with good risk management, so be it. On to the next one. We're always improving, we're always just looking for mistakes, reflecting. That's the point. And just try to really, maintain good habits, be disciplined, be consistent. Otherwise, you're just falling back into the unprofitable loop, which is like really bad. So I hope you at least learned something from this video. I really like making this because I learned so much for myself, and I hope I hope that you guys can pick something up and learn also as well. So if you like it, hit the thumbs up, subscribe, and I will keep pushing these videos now consistently. I promise, every single week, in the weekend, Saturday, Sunday, or if we have a bank holiday on Monday, I will post it on Monday. But I will try to keep posting these every week, and we improve every single day. Don't give up. We're gonna make it. If we're not gonna quit, then we're not gonna lose. Okay, so keep that in mind. Let's get back to the charts Monday. Have a great rest of your Sunday, and I'll see you guys next week. Peace out.